This whole trading thing used to be kind of like the old boys network. It was kind of a private thing. It wasn't real open to the public, and it was really expensive to get involved. When Mike got involved in the business, he had to put down $50,000 in a T-bill and $50,000 into a trading account. When I got back into the business, I put in $500 into an account.
You can open up an account for $250 and you can learn something. You can trade currencies. We all know something about currencies, and you can learn. It's not, we can't make a living on $250 and trading 10 cents. Obviously that's not going to happen, but you start to learn the relationship that currencies have to interest rates, currencies have to housing prices, currencies have to 30-year bonds or S&P 500 or Dow or corn or oil or gold or things like. You start to learn the relationships.
If it's slow, if it's fast, if it's down, if it's up, it doesn't make a difference. When people say to Mike and I, oh, you're in the market, oh my God, you must have had a terrible year last year. We didn't have a terrible year last year because we were able to capitalize on the downside of the market.
You need the courage to execute your plan. There's a lot of people who are, and Steph and I talk about, there's a lot of people that are ready, aim, and there's no fire. They have this great idea, but they can't execute. And there's things that happen, and maybe you aren't always in tune with some of the things that are going on the financial side because you're so wrapped into other things and more important things in your life. And all of a sudden you open up your 401k or your IRA and you're looking, oh my God, and then you, at times I bet you don't even open them. There's probably a stack of them unopened in there.
We want you to start out small so that you're risking $3 a day, and maybe that's really boring to you, but you've got to start out small. We want you to come back tomorrow and be able to have money to play with the next day. So, say you have a string of winning days and you're really enjoying this and it's making sense to you and you're really getting it, well then you'll go from 10 cents a pip to 20 cents or to 50 cents or to $1. It's up to you how you want to make that move. But it's important that you understand and you get a feel, and what better way to do it is starting at 10 cents at a time, where it's like, oh God, I had a really bad day, I lost $3.
I basically prepare for 4 opportunities in a day, generally what I see. So I break it down, and I don't want to ever lose more than 5% of my account. So I know that coming in. I know my downside. I play defense first. I know where I get out before I get in. It's something that Steph's dad hammered into our heads in the pit trading era. It's one of the major rules that's made me a lot of money, is that when things are going good, things are above this red line, I want to buy first. When things are below this previous close or this red line, I want to sell it first. You go to a store and you could buy a can for $1, but you go to the Lakers game and it might be $6. And you're like, oh my God, I feel like I'm just getting ripped off in this thing. I got to buy this for $6, I want a soda. But wouldn't it be nice if I can sell it at the Lakers game at $6 and then go over to maybe the Rite Aid and buy it for $1? Making a pip, it's making one increment of a price. You could actually change the increment from 28 to 29 to a value that fits your risk tolerance. Be fearful when others are greedy. Those points when at the time you're buying this, everything's great. I'm sitting there, there's real estate brokers flipping houses and sitting there buying them for $400,000, selling them for $500,000, having a great time, and then all of a sudden people get greedy and it gets crazy. Learn to react. Hey, when something happens, God forbid, people drive planes through buildings, I knew what to do, because you know that this isn't a moment to say, hey, what's going on over there? Smoke out of one tower, crazy New York. Explosions out of the second one, buy bonds, sell stocks. I
left the business in 2000, and I was a pit trader. And so I knew how to yell and scream and fight for whatever I needed to fight for. But when I got back in the business, it was completely foreign to me. It was completely different. I didn't trade on the computer. I didn't sit and watch charts. I didn't even know how to look at a candlestick chart. I didn't even know what a candlestick chart was. We didn't need those in the pit. So it was, all new to me again, but you spend some time on it. And
if you could do something for 21 straight days, and you say, I commit to putting 2 hours of time into this for 21 straight days, if you told me you commit to that and you're going to do that, I would start to bet money on you. Novice to sophisticated, wherever you fall into, we work with you in that way. That's what we do. We teach you how to ride the bike, how to push the button, where is it at, how to get your statement, how to sell it, how to push the button, how to make sure that it's in there. And so we walk you through that step.
You can play yourself and make your own investment decisions.
Hi, my name is Michael Radkay, and welcome to RDS Trader. We teach the novice to the sophisticated investor. If you would like to receive our 12 free tips to get you on the proper side of the market and receive our highly acclaimed newsletter, fill out the form below and we'll see you on the next page.